You've been trading halts wrong this entire time in your trading, but I'm going to show you how you can be trading halts consistently and profitably on a daily basis, just like I did today on this right here on VLCN. So now this thing halted the first time out of the open today on its simple opening range breakout. This was a beautiful setup, and you can see you're halted right here beneath $6.40. Now it resumed on a very strong note. As you can see, this massive gap here resumed almost up into the sevens. So it was absolutely insane, but this thing halted a few times this morning. It halted here, halted here, halted again here, halted again here, and there was just a ton of opportunities to play these halts. And I'm going to show you how I did it profitably today. So every trade that I take has to have the same criteria met. Does the stock have range? Is the stock in a clear uptrend? Does the stock have nice volume? And do I have defined risk? Defined risk is just another way of saying support. Do I have support beneath price giving me proper risk to reward? And so any setup that I look at, I ask myself those four questions. Do I have range? Do I have trend? Do I have volume? And do I have nice support beneath price giving me proper risk to reward? In this case, I had everything. This thing was perfect. This thing halts this morning right here at $6.40, as you can see right here. And so I'm looking at this here and I know, well, look, I've got support off the pre-market lows here off of $6. Back here, you can see where we found buyers off of VWAP here back in pre-market. And so I've got support there from pre-market. And so I have one of two ways to watch this. I can either watch it over the high of day, or I can watch it off of pullbacks over this past low, which is right here off 6. And so it leaves me with two ways to watch this out of the halt. And of course, depending on where it resumes, that's where I will sort of sway my decisionary process. And so looking here on VLCN, we saw this halt at right here at 640. It resumed up into, it was insane, up into the 690s and 7s. And so obviously, we're not going to go chasing this candle up. And that's what most people do and why they just lose on halts left and right. But this is also why halts work so well, but we have to take the road less traveled. And so the way you have to look at this is not so much let's chase the green, let's buy weakness. Once those profit takers come in, as long as it holds off that level we're talking about here, which is that high of day, our defined risk or our support level, as long as we confirm there, let's look for weakness. Let's look for sellers into that level for an entry there on my end. So that way I'm buying into these pullbacks right here, rather than trying to chase it up into and out of the next halt, right? And so I'm looking for these pullbacks, and what I call it's a dip and rip trade. Whenever I trade halts, I call it a dip and rip, right? These are dip and rip type trades. I'm buying that dip, I'm selling the rip. I'm in, I'm out quickly, but there's so much volatility, so much liquidity, generally speaking, and so much opportunity. And so these trades are quite literally one of my favorite setups. My win rate on these are so high because we have an edge. Our edge is the fact we're waiting for these stocks to pull back to these key levels, buying into weakness, selling back up into that next wave of buyers. That's the name of the game. And so if we zoom in here a little bit, the 15-second time frame, so you can actually see price action a little bit easier, what we saw this morning. What happened here was, look, this thing halted up. Not once, but twice.